I've been meaning to take a look at Mercado or MELI stock for quite some time now. It's basically double topped at 2000 and come down quite a bit, one of those beat down growth stocks. It's still down 40% from its all-time high, so now might still be a good time to get in. It's been showing some relative strength in the past few trading sessions, which is what's getting me to take a look at it now. One of the things that really interests me about this stock is the fact that I get some diversification away from US equities. Though I know that US equities have historically and recently been the best place to be, the majority of my portfolio is there, but I do like to get some diversification away from there. And I also think that a lot of the capital that was flowing into European equities, given the conflicts now, are going to shift to Latin America, and I think MELI is a perfect place to be positioned for that capital to flow in, and obviously there's growth here. So that sets up a perfect case for some FOMO. Let's take a look. Before we take a look into the Amazon of Latin America, if you're new here, my name is Bill Hawk, and on this channel we talk about stocks, crypto, real estate, anything relating to making money and investing. At any point in this video, should you receive some value, I'd really appreciate that you hit the like button and subscribe, because it helps me out with the YouTube algorithm and it helps us reach more people. Also subscribe to the newsletter and join the Discord. The link is in the description. First, as usual, let's go over the business model, and assuming you already know Amazon, then you already have a head start. That's what MercadoLibre is. It's their marketplace, which has been growing at double digits. Although they don't describe it as a flywheel, I do see their other business segments flowing into each other and increasing overall usage, and it's basically a flywheel. That's where Mercado Envios, which is a shipping solution, is clearly doing a superior job in Latin America. The infrastructure there is underdeveloped, which is why it's been a challenge for companies like DHL, FedEx, and UPS. But given the increasing volume and the majority penetration of their network on MercadoLibre, it's clear that Mercado is doing an excellent job in this category. Mercado also has its hand in fintech with Mercado Pago and Credito, which is its own payment processor like Amazon Pay, and its own credit portfolio like other fintech pure plays like SoFi. The latter I found pretty interesting. They give loans to merchants and consumers, and this appears to be more than just a value-added service to Mercado. One of the things I take a look at when evaluating any business is their key operating metrics. So in the case of Mercado, is total payment value, or TPV, for their fintech business, which is basically how much they're transacting on their platform, and gross merchandise value, or GMV, for their commerce business. If you watch my previous videos, then you're already familiar with these terms, which I'm hoping you are, but it's not a big deal if you're not, because that's basically what it is. So in the case of Mercado, how they break down their operating segments is by geography. But as an investor who's just taking a look at emerging market exposure, I don't care as much about the breakdown of geography, but it's nice to see that Brazil is one of their top markets, and then significant growth in also Argentina and Mexico. But I'm more interested in seeing the business by their divisions of commerce and fintech. So this is arguably the most important part of the video, so make sure you pay attention. And if you want the spreadsheet, I highly recommend you sign up to my newsletter, because then you can access it for free, and also join the Discord. The link is in the description. So the first thing we want to take a look at are those operating metrics which I mentioned, which are TPV and GMV, so transaction volume and merchandise volume. You can see that this pretty much drives the revenues, and you can see that it's pretty correlated. So they enjoyed 75% growth and 50% growth respectively for TPV and GMV in 2020, and you can see these numbers again, although have slowed down a bit in 2021, they're still significant, and revenues grew 78%, almost 80% in 2021, which is really significant and impressive. But of course, they're coming off the back of the pandemic, so there are always those tailwinds. And as you can see here, I broke down revenues by fintech and commerce per quarter in 2021, just because that's the way I like to see it rather than geography. And I tried to see which segment was growing faster, whether it be fintech or commerce, to know where they're going, what direction. But you can see they're pretty much correlated, which tells me there isn't necessarily one category, fintech or commerce, driving the growth. And I think that it's really coming from the flywheel, and the MercadoLibre is probably driving the growth for the fintech business still. But I do think that this business has legs of its own that it can run eventually. Aside from the historicals, the most challenging thing to do here is really forecasting the future of TPV and GMV, and then seeing how we're going to drive that into revenue. So I basically reduced their growth in both of these categories up until 2024, assuming they're maturing along the way and these growth rates aren't sustainable. It's the more conservative approach, which is what I always like to take. They, as you can see here, have a take rate of about 3% of their fintech TPV, and GMV is about 18%. And they've been growing these. This is actually really impressive, which you can see in their investor presentation. So assuming those stay constant, I basically got them to about $13 billion in revenue in 2024. Analysts are expecting 16 billion. So we're still pretty much in line. I don't think I've deviated too much from the analyst expectations, but where we have deviated quite a bit is the net income margin. They're expecting much higher EPS as an analyst mean. And I believe that I'm being a little bit more conservative because I'm seeing the margins declining, but this likely is temporary because of supply chain issues and inflation, but we just don't know. And that's where I'd like to be more conservative. I'm not betting on the fact that inflation is going away in the next year. I just don't know that. I'm not betting on that. And that's what makes this the most risky. So now we take these assumptions and do the DCF, which we do, and we get a fair value per share for my case of $850. And I've seen others like Simply Wall Street at a fair value per share of about $4,000, which I think is crazy, but I have to look at their assumptions. But I'm likely coming at this from the more bearish margins, and that's probably the difference. But again, I'm more comfortable with mines, and given that we bottomed out at around that price, that's where I would like to enter it. After factoring other valuation multiples like the price to free cash flow, price to sales, and price to earnings, and giving them more normalized targets in 2024, I get a price target of just about over $1,000. So I'm very comfortable with MELI stock being $1,000. Given we bottomed out, and we don't know if we bottomed out yet, we've hit 875 as a place of support. That's where I would like to enter. That's basically where I would put my limit orders, because I would like to be part of this business, but I would want it at that 875 price. And I'm going to be greedy because I'm not desperate here. There are a ton of geopolitical risk with Mercado, as with any emerging markets, but I think it just makes sense to diversify away from the US in some cases. Most of my portfolio is in the US and will be in the US and in US dollars, but I like to have that diversification because it just makes sense to me. It helps balance the portfolio, and that's where I think entering at, especially in this high growth stock, in this high growth company, makes sense, because that's where I like to be. And I'd like to enter it probably in that $850, $875 range. If it hits there again, I'm pretty comfortable waiting, and I think that we are probably going to hit those lows again and retest them, if not go lower. Because of the environment we're in right now with the rising rates, this adds additional risk. I'm willing to be patient with this and add at those prices. So I'm just going to set my limit order. It makes sense for me. Let me know what you think, if this stock makes sense for you, if the risk makes sense for you. Of course, you have to do your own research. Anyways, I hope this video helped. If it did, again, hit the like button and subscribe, join the newsletter, and join the Discord. I hope to see you there.